Oil is back in the spotlight, Nvidia is under pressure, and Wall Street is starting the week on a cautious note. Hey everyone, it's Tuesday morning, August 11th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in, today's episode is brought to you by AMF Capital, Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. All right, let's get started. So, U.S. stocks moved slightly lower yesterday. The Standard & Poor's 500 slipped almost 0.1%, the Dow Jones fell 0.1%, and the Nasdaq dropped 0.3%. One of the biggest drags was Nvidia. The stock fell nearly 3% after reports that the company is working with Apollo Global and Blackstone on a massive $500 billion AI infrastructure funding package. Intel also moved lower after announcing plans to issue new shares to raise around $15 billion. But, well, the bigger story for markets was once again oil. Brent crude climbed to around $87 per barrel as investors waited for more clarity on the Strait of Hormuz. Iran said a deal to reopen the crucial shipping route is now very close, but markets clearly aren't celebrating just yet. And that brings us straight back to inflation. Tomorrow we'll get the latest U.S. Consumer Price Index. That number could be particularly important because Federal Reserve officials remain divided over whether interest rates need to move higher. Friday's surprisingly weak jobs report reduced some of that pressure, but another hot inflation reading could quickly change the conversation. Meanwhile, earnings season is slowing down. More than 80% of Standard & Poor's 500 companies have already reported, but AI remains in focus. CoreWeave, Nebius, Cerebras Systems, and Supermicrocomputer are among the companies reporting this week, giving investors another look at just how strong the AI infrastructure boom really is. So, oil, inflation, and AI, 3 themes to keep an eye on as the week gets going. All right, that's it for today's Capital Markets Quickie. If you found this helpful, hit subscribe and stay in the loop. See you tomorrow morning.